Good afternoon, traders. This is Chris Buss with Traders Profit Compass with a closing market wrap for Wednesday, September 30th. Okay, although I just did a video about 3 hours ago, a lot has happened since then, so let's dive into the charts and see what we can find out. This is a 2-hour chart. We had been highlighting this very wide trading range between 341.50 and 322, and we had broken out of this bullish falling wedge, gapped higher. That gap is still in effect, has not been filled. This morning futures came down and tagged that area in the pre-market, but then recaptured the gap before the open, held it, and then made an advance in the morning and early afternoon, found resistance here at 338, and then has since dropped in back into the range in the last hour and a half, 2 hours of trade, starting about 2 o'clock, I guess. And actually, it's a little bit worse than it shows here because there was some follow-up selling after the close, which puts price down towards 334, 333. So we'll see what happens with futures tomorrow and how we open. But for the bulls, it's pretty simple. Recapture this 336 level and then make a run towards 341.50. The bears want to come down and fill this gap and then break it below this 329 level and then send it back towards 322. That may not happen all tomorrow. That's just the lay of the land, the key levels. And you know, you never want to see a breakout and then come back into the range. You know, if this was solid, it should have back tested that. That's fine. You expect that. You know, breakout, back test, and go. It didn't do that. It just, you know, it went up and then failed, and it sliced right through it. It didn't even hesitate. And I just had this feeling today, you know, when I saw it, this end of quarter, end of month window dressing thing that we've seen in the past, that, you know, they come back in and then they sell it off after, you know, after the quarter closes. I'm not saying that's what happened, but it sure looks like that's what happened, except they didn't wait till tomorrow. Now you can say, oh, there's some news that came out about the COVID relief package or whatever. That may be true, but you can't trade the news cycle. I mean, that stuff happens in a heartbeat. And if it was real, they would have ignored it because we've known that the whole time. So that wasn't new information, but they sold it off. So let's drill down and look at the 30-minute chart. And here it's a lot clearer. We had the gap up yesterday. Was it yesterday? Yeah, Monday. Gap up, oscillated in this $3 range, made an initial push up to resistance at 335, came back to test the gap. Everything's fine. Then they made a move this morning, broke out. We were targeting a $3 measured move on a break of a $3 range. They got it. They came up and tagged this 338 resistance level, and then they let go and closed back down inside the range, the original range. Now, you know, and we've talked about it before, when you break out of a range and then you come back into the range, the target is the bottom of the prior range. And we never made that. I was actually looking for that this afternoon late for them to just, dump it and come right back in to 332, but they didn't do that. Maybe that'll happen tomorrow. But we are back in the trading range, and to get anything going to the upside, they got to take out 335. And the bears need to break this 332 and have a $3 gap fill. Those are the lines. Now tomorrow, let's just look at some scenarios. Let's say they open and there's no big overnight move, and they open in the middle of the range. Let's say they sell it off right away and come in here to this 332. If you're a bull, you got to buy there. That's your objective long against the gap. And you set your stop just below 332. And you're looking for a move back up to 335. That's your objective. Oscillating, inside the box, just like you would have bought here. Came back, never took you out. You got your $3 move. So tomorrow, you would use that same playbook. If they come down and it looks like the gap's going to hold, you buy there and set your stop below and look for the move back up. If they open in the middle of the gap, in the middle of the range, and immediately take it higher, you really can't do anything, in no man's land right here. You got to wait for the breakout of 335. Then you can take it long with a stop just below, and then your target is 338 again. So those are the key levels tomorrow morning, depending on, what happens with overnight futures and all that kind of stuff. But now we're in October. We don't have to worry about, I'm not going to say we don't have to worry about shenanigans. We just don't have to worry about end of quarter shenanigans. So now we should be back into October, regular trading. It has a history of being a volatile month. We've got elevated vol across the board. So these wild moves can be real money makers if you know your levels and you honor your stops, and you're playing this vol. This is field day if you're a good intraday trader. Just key off your levels. You buy support and you sell resistance. If you bought support this morning and you sold resistance, you did great. That's why you never, when you get up to resistance, like we talked about on the midday update, when you get to resistance, your default position has to be, I assume resistance holds. So you either lighten up, raise your stops, raise your strikes. If you want to stay long, that's fine. But you can't just assume, it's going to break out and hold your position and give it all back. You've got to, when you get up to resistance, you got to play your cards close to the vest. You got to tighten up your stops to make sure you don't give back. You want to protect that win. Roll and protect. So that's the setup for tomorrow. Pretty much the same thing on the Qs, except it found the wall at 280, which we had been keying off of, and it liquidated, it rejected hard. There was some after the close selling. It's down here in this 177 area. Tomorrow, if it opens right around 177, you can use that level because you've got this little shelf of support here at 277. You could, if you're nimble and you want to give it a try and it looks like it's going to hold, your target would be then back to 280. But if 277 fails, then you're back into the soup. You're back into 274, 275, 273 down there. You've got gap support at 274, and that's $2.50 wide. So if that were to fail, 274, then you're coming down to 271.50 to fill that gap. And then if that breaks, you're down to 268, where that is another key level, because if the bears break that, then we're back down at the lows. So really for the bulls, they got to take out 280. They got to take out 280 to give that open doorway back towards the highs. Unless they do that, we just remain in the chop zone. And today was a nice illustration of why I haven't gone, gonzo long. They got to take out this level. If they don't take out 280, then it's trapped. It's trapped in this trading range. So for me, the strategic level for the Qs is breaking through this 280. And if that happens and SPY breaks above 341.50, then with confirmation from SPY, should be off to the races. But until that happens, it's just volatility in a wide range, and I'd rather be tactical in that situation than be strategically long a ton of names. I want to see that happen first. This is just a zoomed in view. Here you see that level at 277 on the 30-minute where it reached this 280, could not get through, and comes back. That's also another tell if you're an intraday trader. When you come up to this level and it tries and it tries and it tries and it tries, for hours, I don't know how many hours that was, at least 2 or 3 hours, and it can't get through, you gotta assume it's not going to get through. Assume resistance holds until proven otherwise. So if you had all these gains, you shouldn't be holding on to those gains hoping it's going to break out. You take it to the bank. If it breaks out, you reset, you get long, and you go. Doesn't mean you necessarily have to be short, but you can't or shouldn't, just hold all these gains from the morning hoping it's going to break out. A lot of times it'll stall and come back. So that's what it did. So tomorrow, it's got to hold 277, or it's coming back to this 274 area where it will test this $2.50 gap here between 274 and 271.50. IWM gave it all back. There was some aftermarket selling here. It had broken out, reached this resistance level that we had pre-identified at 151.50, and then it let go and closed down here in the after-hour session around 149. That's a good pivot for you tomorrow if you like trading the small caps. Above 149, you can be long and look for a run back up to 151.50, or even to close the gap up towards 153. But if it can't hold, then you're testing this gap, and if that doesn't hold, you're back to the bottom of the trading range. But even here, you see, we got lower highs and lower lows. So I could easily redraw this channel, take this falling wedge out, it has already played out, and move this line up here, and now we've got, a downtrend channel if it can't break out, which would target, the prior lows back down here. And this is just another representation of a 30-minute chart. You can see it came up, found resistance, and then pulled back. So that's your key level, in the morning, this 149.50 right here. Above, bulls are fine. Below, bears take charge. And the thing is, do you know, I just noticed this. Notice the bearish divergence on momentum and RSI. I don't have it drawn in, but you can see at this level, at this high, momentum and RSI were here. Price went higher, but momentum and RSI went lower. So that's your bearish divergence. And if you were actively trading that, and watching every tick, that's a warning flag. If you're long at resistance with momentum and RSI fading, you want to see the opposite for a breakout. You want to see at a higher high in price, you want to see a higher high in momentum and RSI. That would give you more confidence that it was going to break out. But with momentum and RSI waning, with price at resistance, it it failed. It rolled over there. So tomorrow we'll see if this 149 holds or not. Facebook, we had said at the midday update, you don't want to see this uptrend line break. And if it did, it was coming back to 260, and that's exactly what happened. It didn't close at 260, but it came down for a tag and closed below the trend line. So for tomorrow, you got to see 263 taken out before you can get long. And actually, it wouldn't be a bad idea to just give up that little bit of gain and take it long if it takes out today's high around 265. That would give you more confidence, because above 265, if it can do that, you got to run at 273 and you got to run at 278 if things get going to the upside. So tomorrow, be cautious on the bullish side. You got to see today's high get taken out before you can get long. But right now, the bears are in a position to push this down to 260, and if they break 260, then 255 and 250 on the downside if this whole thing rolls over. Apple. See, this is a totally different look than we had on IWM. Notice, came up to flag with momentum here and here. Price went higher, and so did momentum and RSI. That's what you want to see. Now, it did sell off like everything else, but all it did was come back and back test the original breakout right here at 115. So tomorrow, as long as price stays above 115 in this trend line, the bulls still have something cooking. But if 115 breaks and price rolls over, then you're looking at 113 real quick. And if 113 breaks, then you're looking at 110 real quick, because then this will look like a false move false breakout and it ran out of gas. Couldn't keep going. So key off your trend line, key off 115. If you're long, you can stay long against those two levels. And if you're not in, and you want to look at the short side, a break of 115 would be an objective level to try a short, and then see if you get the break of 113, and then you'll really be in business on a break below. You could also just wait for 113 to break and then play for $3. That would be fine too. But if this thing breaks, why not take it here? Because I think you'll get $2 right out of the gate coming to the bottom of this trading range, and then you'll already be green and you'll have a little bit to play with. So just a couple ideas on how to trade that. Amazon, there's your fake breakout right here. It broke above 3,200, couldn't hold it, and as soon as it came back down into the range, right back down $50 in a heartbeat, right back down to this 3150 level. And that's how it works. Fake breakout, back into the range, right back down to the bottom. Use that in your thinking when you're actively trading this stuff. It is a good rule of thumb. It won't work 100% of the time, but it works an awful lot. So it's certainly a place that if you were long and you saw that break back below 3,200, you got to get out. You got to assume it's going to come back down. And if you had bought in the morning, if you made a good buy here at support, you were, $60 to the good. Once you see the price come back down below 3,200, you got to close out and book your win. Microsoft, it too came back into the range and had a touch down here really close to 208, but held its uptrend line. I think you're still okay if you're long. You want to see 211 be recaptured tomorrow and push towards 213, but you can't see 208 go to the downside. And if that happens, you're coming back here to 205, I would think, rather quickly, because it will look like a failed move once this trend line breaks and it breaks below this support level at 208. So bulls are still fine. Of course, if you got above 213, no matter what your preconceived notions are, you got to get long if it breaks out here above 213, because then you got to run to 221.50 and you should have pretty much a clear path. So if things get really bullish tomorrow and Friday, 213 is a great level to get long if it were to break out there. Netflix held it together pretty well, holding the uptrend line up against resistance at 505, like we've been talking about. You get a break of 505, you got a $15 run to 520 tomorrow or Friday. If the uptrend line breaks and things get soggy, you got to hold 495. If you don't, or it doesn't, coming back to 485 and probably lower if the whole thing, rolls over. Google, real simple. Got to hold 1465. If it can't hold that tomorrow, coming on back, it's a real key level. Yes, it did lose this uptrend support line, which isn't great, but it did hold lateral support. And if it holds that tomorrow, it can recapture the trend and go higher. But anything below 1465, you got to be really concerned if you've got a long position. I would be thinking seriously about closing that out and, you know, actually going the other way if that were to break down. I think you're going to come back into the 410 area if this breaks. Tesla really didn't do anything the rest of the day, just kind of flatlined here at 430. Was not able to take that level out. Tomorrow, if it can break above, then you might have a chance like at 450, but otherwise below 420, it's going to come back into this 410 area. Looks like it's just, you know, hanging out with not a lot of momentum, you know, in either direction. You can see that the PPO has flattened out, may put in a bearish cross here, and RSI has flattened out as well. So not a lot going on at Tesla this last couple of days. SMH closed right near this 175 level. That's the level we want to key off of for a strategic long if this were to break out and hold. We've got $12 measured move. The width of this box is $12. If it breaks out, you'll probably see the Qs breaking above 280. That's a trade I want to be in should it happen. And of course, tomorrow, if we see a big stall, and I would go down to a 30-minute chart at least to watch this if you want to actively trade it. If it gets rejected here, good chance it comes back to this 162.50 area and more consolidation if it can't break out on this run. So that would be something to watch if you want to, you know, try actively trading. I pulled up Micron today. It was off 7%. I don't think there's an immediate trade to make. It's, you know, it's really been in no man's land for quite a while. Got this massive triangle forming, but we've been thrashing around, you know, in a pretty wide range. What I've got my eye on here is the PPO rolling over, looking like it's going to put in a bear cross, and you can see RSI has broken trend and is now below 50. So if this is on a downward path, you've got a level here at 45.50 more or less, and then you've got this lower part of the triangle, this uptrend line. Depending on what's going on in the market when it gets down in this area, it may be a nice long for a bounce back up towards 50, or if it fails, a retest of this 42 area down here. So it's just, I don't think there's anything immediate right here in no man's land. You've got no line to shoot against. And, you know, if you're new to my work and new to the channel, first of all, thanks for dropping by and spending some time with me. But from a trade setup objective, you want to have a nice line to shoot against where you know exactly when you're wrong. You know, up here against this line might have been a nice trade, you know, if you're on top of it. You know, I wasn't. But this was earnings induced. So I usually don't hold through earnings because, you know, stuff like this can happen. I know there were a lot of call buyers in the last week or so that were looking for this to, you know, go the other way. They all lost. So I step aside during earnings and then try and pick up the ball afterward to see if there's, you know, follow through in this direction, or if it was, you know, an overshoot and then they're going to break it out. So we'll just have to see in the days and weeks ahead where Micron is going. But it's a leading component. I mean, it's a big important name in the semiconductor space. So even if you're not trading it, it's a good idea to keep your eye on it just for sentiment's sake, if nothing else. Okay, that's all I have for the recap. I hope you found it helpful. Let's see what futures has in store for us tonight, and we'll hit it bright and early tomorrow morning with a pre-market read, which I'll send out. If you're new to the channel, please hit the subscribe button and the alarm bell, and you'll get notified when I publish new content. If you like the content, please hit the like button. And also, if you're new and haven't visited the website, check over in the show notes for links to the blog, where you'll find a lot of helpful information on trading psychology and tips and tricks in trading. Should be helpful to aspiring traders at all levels. And also, you can subscribe to my content, where you'll get all my new published information sent directly to your email box, and you won't have to go hunting for it. So that's quite convenient. So until we talk next time, this has been Chris Buss with Traders Profit Compass. Thanks for stopping by. I appreciate it. Talk to you tomorrow.